Hey, what's up, good people? How you doing? As you can see, we got the family here. We got everybody, all right? We're no longer the core four. We're not the core four. Who's the core four? Hey, listen, we're going to chop it up. We're going to get right into it. I want these gentlemen both to take about a minute apiece to introduce themselves. Kenan is traveling, so he's having a little issues because internet and all of that. You know how these hotels and stuff are. Mo, I'm going to start with you, brother Mo. Introduce yourself.
Man, I love it. The Quad Squad is here. Let me break it out.
Boom.
We're throwing it out there. And I got to tell you, thank you so much for having me on, Larry. I always look forward to hearing what nuggets of knowledge you can bring us. And I know it's good when we have us all together. There's nothing but good things that can happen. So, welcome, everyone. And I can't wait to talk about the action out there. Remember, even when the market's dropping and we have all this FUD, there's opportunity. But the big question we're probably going to get into, is this permanent, or is there a way that we could rebound for the next few weeks and enjoy some profits? So I can't wait to get into it.
That's good. That's good. Josh, holla
Hey,
at your
man.
boy.
Hey, Larry, thank you for having me on today with the group here. We had an interesting day in the market. We had this unexpected turn of events, even though we had been pre-warned by them 2 months ago that this would likely happen. Still, it seemed to come out of nowhere. Here we are, one of the biggest trade weeks of the year. We've got some big names reporting, Amazon and Apple, Thursday after market close, all geared up for a market that's been moving up for 6 months straight. And then, the federal government, the politicians, they throw this monkey wrench into Wall Street, and everything comes to a little bit of a stop and a moment where we have to reassess it. Now, I've been thinking about this, poring over the charts, and I'm going to just hold back a little bit, but I'm ready to get into where these markets are going. I've got some thoughts and opinions. I've got a spot where I think the SPY will pull back to, which would continue the bearish narrative. But if it broke through my trend line, Larry, then it's going to begin the bearish narrative. So, yeah, I'm excited about this show. Hopefully we can have some conversation that makes all of us some money on the show and out there in the world, man.
All right, all right. Kenan, can you hear me, brother? I guess not. So, hey,
I can hear you. I can hear
all
you.
right,
But
there you
just
go, my
know,
man.
my
Go ahead and
camera.
introduce yourself, Kenan, and let them know
Listen,
about your situation.
what's going on, everybody? So I'm basically using I'm using
Makeshift
a flip phone for the camera today.
flip phone.
So hey, it is what it is. It's all about the information, though, right? So
That's
everybody, I
it.
hope you're happy to be here. We're happy to be here. Anything we say is not a suggestion to buy, hold, or sell. However, I've witnessed Larry, I've witnessed Mo, I've witnessed Josh make a lot of money in the stock market. So I feel like whatever they say here is really worth taking note of. And I mean literally taking note of, as in what are the support levels? What's going on fundamentally? I actually had someone in a comment on a video that I made today say, Kenan, I wanted to only hear about the stocks. What's going on with the stocks? What's going on with the stocks? Because in the first half of the video, I was talking about what's going on in the overall economic world, aka what's happening with the United States getting downgraded. Because you're wondering, oh man, I'm looking at SoFi. This is what the charts say. Yeah, that's important. But understanding that things can happen in the world that will impact all of the stocks. So we got to have an open mind and not just get that tunnel vision, because you can miss out on so many things that are happening.
Cool, cool. Yep, yes, sir. So I'm going to start off, and then I want everybody to take a piece of this, of what's happening. We know that Finch downgraded the U.S. credit rating today. That's what's going on with the market. That's why when you looked at your portfolio, it had a lot of red in it today, regardless of what you're invested in. That's what's going on. So now we lost our credit rating from a triple A to a double A, right? And they said it was because of, not because of 1 year or 2 years or 4 years, because of the last 20 years of poor governance. Meaning, our government has just been doing an horrible job with our debt ceiling and our ability to pay our bills, our ability to pay our debt, just like you with your credit card, right? So if you just got downgraded by your credit card, what do your credit card do? They actually lower the amount that you can borrow. They start lowering it, okay? And putting a freeze on it. And so is it the end of the world? No. This happened before Standard & Poor's did it in 2011. The market fell, but it began a free fall that time. This time we will see, because it wasn't Standard & Poor's, though Finch is not Finch ain't no punk. I'm just saying, like we used to say it in the hood. Hey, so that's some of the things that's going on. Josh, would you like to, let's start with Mo. Mo, would you like to add to that?
Oh man, I'm glad you came to me on this, Larry. I want everybody to realize what we got is an opportunity. All right, and Larry, put me on the big screen. I'm going to share
yes,
a chart
sir.
there. Yeah, I'm going to share a chart with them so they can see what happened back in August 5th, 2011. I'm going to pull up this chart once we get on here, and
go ahead.
So if you can pull that over, take a look at this, folks. This is what happened back in 2011. We had the market sell off. It was a Friday night. They announced a downgrade by the S&P. By the end of the year, remember, that's August. By the end of that year, it rebounded almost all the way back up. So is this going to be that bad? I don't know. But look at the national debt here. Let me see if I can shrink this down a little bit so everybody can see it. Almost, we're getting there. $32 trillion, left-hand corner up here. This is the true reason they're downgrading. Remember that this debt is growing dramatically. Take a look at the deficit right here. Almost 1.7 trillion this year. That means they're borrowing and spending more money than they are collecting by a ton. And that, even though you're going to hear everybody out there talking about, oh, well, the downgrades because the government can't get along. The truth is that if you go back to 1960, 1980, 2000, GDP, it's compared to the debt to the GDP, it was like 50, 60%. It's now over 100 and something percent. It's crazy high. I think it's like 120. It's absolutely nuts. And so the true reason Fitch finally came out and said, look, enough's enough. They'll say it's the government and try to make them get along. But the truth is the debt's getting out of control. We are spending way too much money to the point that we're borrowing over almost $2 trillion a year above and beyond what we are doing. The tax bill, or I should say the interest bill for this debt, is getting higher and higher because the Fed has to keep the rates higher. And every time they have to have new treasuries coming out. And of course, as Larry said, the downgrade in the rating means the interest on the debt now gets more expensive for the U.S. government. That also is going to lead to more pain down the road. It's like an avalanche of pain. So are we in trouble? Is there a way to make money off this? I think the answer is yes to both. And I don't think the market's going to crash yet. I think we actually are going to see a turnaround here in the short term. And hopefully we'll see the markets recover quickly and back up. We know this is not like 2011, totally different situation. And I am very optimistic that we're going to make bank, but we'll wait and see.
Josh, you go ahead, and then Kenan, you come right behind that. And then we're going to have a lightning round, meaning we're going to be interrupting each other to get in. And we're just going to talk about a few stocks. And then we're going to take one or two questions. But go ahead, Josh.
Okay, so I'm just going to characterize what I think is going to happen tomorrow. We still have two heavy hitters, two of the greatest companies in the world, Amazon and Apple, reporting tomorrow. And I've always said that Apple is a stock indicator for the market. Now, if we see a run-up and even a retest of the high, then that will tell me that the big money, the hedge funds, and the investment firms like BlackRock and State Street and Fidelity, that they're not scared of this and that it's going to pass. Now, I think it was, somebody in the chat group said to me that Jamie Dimon came out and reacted to the downgrade, and he said, it's no big deal. We expected it. Yeah. It's not really going to phase the markets very much. And so now, I'm just saying this to keep it in balance. We don't have a confirmation that it's spiraling out of control. That's the most important thing I could say tonight is before you sell all your bags, just pause for a moment. Let's give it 48 hours. Today was the first day of digestion. A lot of stocks came down and hit support, and they're very likely to bounce tomorrow. But if they were to sell off further and break to the next level, then, we could get a little panicky. So don't turn around and sell all of your Apple and buy SQQQ, okay? But having said that, a good play on VIX, or if we do get a pop-up, a position on the SQQQ would make more sense today than it has in the last 6 months.
Mm-hmm.
I want to throw out one more thing,
Hey,
Larry.
hey, Josh, hold on.
Yeah,
I'm gonna let Kenan get in because
go for
that
it. Go for
what you want to throw in is gonna be another. That's a
it.
whole nother question. Actually, you went into some of my other questions because I want to spend more time in that area. Okay, let's just talk about let's talk about the Finch downgrade, Kenan, and then Josh. I want you to come right back because I want to ask you about Apple and Amazon earnings. Okay, go ahead,
Okay,
Kenan.
so I'm on. All right, so everybody who's here, could I get an oven mitt in the chat? Wondering what emoji that is? It's called the
No.
glove, right? But we're using that as our oven mitt for now. Now, with Fitch giving us this downgrade, understand this: Fitch is basically one of those companies that's just checking the credit. So you know how you could think of it like an agency, right? Just an agency, like not even really a regulator, but they're more so of people who are saying, is this country fit to pay off their debt? And there are three companies or agencies like this, but this is just one of them.
Oh man.
Yeah.
All right, Josh, you go right to it.
So it's
Go to your
still
point. Oh, I'm
technically
sorry. You
good
still on it?
because the United
Okay.
States is the United States. It is what it is. But what's going to
Go.
happen is all of the smart money, they're going to tell you to stop buying everything, right? I'm not telling you what you should buy, but I want you to understand this. They're going to tell you to stop buying it. And then, like Mo was saying, later on in the year, 6 months, 8 months from now, they're going to say, oh, yeah, we were buying it. But they were telling you don't
Mhm.
buy, right? And I'm talking about not just your hype plays or your Dogecoin or anything like that or GameStop or AMC, nothing like that. I'm talking about your long term plays. When you see them coming down, when you see your portfolio going down, what you got to do is say, oh, am I DCAing into this? Am I building out that foundation? Whenever you see that you get under your average, and it could be because some macroeconomic thing like this downgrade for the United States,
Yep.
understand this. This is where I go even harder into building out my foundation because you want to buy those things low. Because think about it, 9 out of 10 of us are holding these things until retirement. There are other plays that we do decide to trade. And remember, I want y'all to just understand this because I just want to just leave on this. You have to know the difference between trading and investing. And I would say if you don't know how to trade, it is what it is, DCA. But if you do know how to trade, it's time to step it up and learn how to make money on the way down because we're going to be getting swamped with FUD, fear, uncertainty, and doubt. And those of us that know how to trade, my people, my live stream family, you know what time it is? Listen, we looking to make money. If they could crash the market all they want, all we're going to do is make money, ride the wave down, and then boom, load up on our long-term plays. And then you know what time it is. We're going straight to the promised land, baby. Simple as that.
All right. So this is what we're gonna do. Of course, you would unfreeze as soon as I hit the switch. Hey, this is what we're gonna do. We're gonna have a lightning round. Listen, good people. I'm gonna tell you right now. We're about to interrupt each other. So if you don't like that, you're gonna miss this. I want this to be power packed today. I want you guys to leave with a lot of takeaways. Okay. So I want you guys to get ready. Starting with you, Josh. We're gonna talk about earnings. We got Apple coming tomorrow. We got Amazon, two of the biggest indicators in the stock market, okay? These are heavily weighted and it tells you what the consumer is doing, right? Now, I'll bag it up. I'll come on the tail end. Let's start with you, Josh. I'll come on the tail end. And we haven't discussed this, good people. I just want you to hear it from four different perspectives. Josh, go with it.
Okay, I'm just going to give it to you simple. I'm not confident that Apple has sold more phones in the second quarter of this year, and it wouldn't shock me if things slowed down because there was supply issues that we were aware of. What I think will do it for both Apple and Amazon tomorrow is two things. This is what it's all about. The stocks have come down to this. It's what is their AI story. Now, Apple already teased the Wall Street with the fact that they were going to make some big AI announcements, that they were going to show their hand because they've been playing coy so far with what they're doing with AI integration. And I think this particular earnings is going to be their big display of their plan. Now, and it would make sense because if there is any weakness in the numbers, then they got to bring and put their best foot forward. And that's what I'm expecting out of them. Now, the only way that they could take money out of my pocket is if they gave, in addition to that, because I'm expecting that, is if they gave some bad forward guidance. We saw that with some other plays. A couple of them come to mind today. I think it was that I forget which one I'm thinking of, but we saw it already that they killed it. They had great numbers. They gave weak forward guidance, and so that's what I'm going to be watching out for. I'm going to be watching for the stocks to pump off of AI rhetoric, and then we're going to see if they could turn around. If they fell off of any form of weak guidance, Amazon could go all the way up to the high 130s, even as high as 140. And Apple, my best target would be 202, but we could get a double top at 190.
Say that again. Say that again for the people at home with their pencils. Say it again.
Okay, really simply, Amazon right now is trading in a range between 122 on the low end and all the way up to 140 on the high end. And if you look at the chart, you're getting sort of a megaphone shape coming out where you're seeing increasing volatility, right? So I would expect some significant swings up. As long as we don't break down below 122, this is absolutely in play. So 122 to 140 on Amazon. And but I'm not saying it's going to hit 140 on earnings. I would be pleased with anything at this point. I'd be pleased with anything above 133, to be honest. Apple, the range that we're looking at is to long run. I know for certain we're going to come back and back test 183. But at the moment, if they come out with some good positive guidance and some good positive AI rhetoric, we are wanting to go upwards to 199 and over to 202. If they killed it and everything was good, the very, very top that it could reach would be between 204 and 208. 208 being max, max, max. But that would surprise me at this point.
Hold on, I got a problem, man. Am I seeing this like button correctly? Am I seeing the likes correctly? Josh, hold on. No, Josh. I want Kenan. Kenan, and then I want you to answer the question. Kenan, address this like button issue, man. It must be broke.
Yeah, listen, man. We know the whole family is in the building. So the fact that we have less than even 800 likes is blowing my mind, family. Listen, let's show all the doubters, all the haters, everybody who don't want to see us succeed. Let's show them how we stand together strong, family. Hit that like button and help the notifications go out to people, help the messages go out to people. I've been hearing people say time and time again, oh man, YouTube isn't sharing your videos and I already hit the notification bell. Well, hit the like button for us so then it can show them that we are standing together strong. And I want you to know this. We talked about that Fitch thing, and I know that it's going to go over some people's heads.
Listen.
Yep, go ahead, Mo.
I was going to say, he's rolling up. I can hear he's out there in paradise right now.
We're going to make sure that you stay informed. So hit the like button. I want to get a call option on the like button. My people who don't know options yet, that means that I'm basically looking at the analytics. I'm looking at who's in the comments. I see the whole family is in here. I got high reason to believe that we could get to 800. And after I get to 800, I'm taking another call option on it, family. Hit that like button for all of us. Let's get it.
I love that, Marco.
I got the 1,000, Kenan.
Right now.
I got the 1,000. I got a call option way out of the money on 1,000. Watch, hit the like button. Watch the like button as you hit it. Update it. It'll update. And when it updates, man, you're seeing this thing go through the roof. Do yourself a favor. Put the Tesla cat in the comment. Put the oven mitts in there, the coffee gloves, the heart. Put it all in there, folks. We are a family here, and we're here to help each other get rich.
Mo, what do you think about the earnings? We know that, listen, anything we say is not a suggestion for you to buy, hold, or sell. This is just what we think about the earnings tomorrow. Tomorrow is, to me, is the biggest earning day of the last 2 weeks, really.
Yeah.
This quarter. Yeah. And so what do you think, whatever you want to talk about it, a buying opportunity, whatever.
I got to tell you, I've had leap options on Apple, Larry, way back. We're talking last summer. And when we had these leap options, they doubled in value and I got rid of them. If I would have kept them, it was based on having Apple hit 200 a share sometime within July of 2023. They got up close to 199. I was off by $1. I apologize. I am happy to see that. Not every stock that we talk about and we give predictions on we're going to hit. Apple was definitely one of them that I was able to. So now looking at Apple at, 192 roughly? We got earnings coming out, Amazon, Apple. I'm bullish on them. I actually think it's a nice setup to see the Fitch come out, talk about how much the debt is. I know it's related to the debt. It's not related to the companies and how they're doing. The Fitch downgrades based on how much money the government's spending. And that in itself is one of the reasons I like these to stay bullish for now. We have record amount of spending by the government, which fuels the markets. And of course, the retail people out there fuel the markets. We're seeing everyone borrowing money like there's no tomorrow. Unemployment still down in the threes. You can't have a recession with the unemployment in the threes. Take my word on this. It will change, and it will change before the end of this year. And I think the recession starts before the end of this year. But for now, Larry, I like Amazon and I really like Apple. And we'll see if it comes. We'll see if it, I'd say, pays off like I would like it to.
Yep. Hey, I think that if I was to take a guess, and of course this is a guess, I believe, like Josh believes, that and we didn't discuss this. My thoughts are my thoughts, and their thoughts are their thoughts. I believe that yeah, they most likely didn't sell any more phones, but it's the forward guidance. They teased a little bit about their AI play, and I think that in this AI bubble, we're about 3/4 in for this bubble. All right, AI is going to be big. It's real. But right now, everybody, if you got a hamburger, if you make hamburgers, you got an AI hamburger right now. So everybody's riding the wave. I think Apple will I believe that Apple will have a decent, not strong, could be strong, from decent to strong forward guidance. And I think Apple will be okay. Now, not Meta, Amazon, I wouldn't be betting on. Me personally. They could knock it out of the park, but I wouldn't bet on Amazon knocking it out of the park. I could be proven wrong, right? Nobody has a crystal ball. That's why I always buy the rumor, sell the news. I am out of my plays before. I did not enter into a play for Amazon, but I did for Apple. Okay, let's look at this right quick. Let's take a look. While we have it up, on average, August has been the worst performing month for stocks since 1986, right? Now, for me, I'm glad that Finch decided to do it today in the worst month because a lot of people were prepared. Everybody, myself, I started to slow down in the amounts of trades that I was taking. Now, let's go to Apple. This is what I like to see after a day like today. I look at the after hours. Now, this is not written in the stone. This doesn't mean anything great, but Apple right now is pretty much holding steady in the after hours, which is something that I like to see. Of course, tomorrow, pre-market, it could be tanking, but right now, this seems okay to me. And Amazon, the same thing after hours, right? Actually, a little green, not much. But those are some of the things that I like to see after a day like today. Jamie Dimon is a prop right now. I'm just going to call it what it is. Yes, we know what he is. Anybody that want to chime in on that, you can. Like the banking issue. The banking issue was as bad as it was. They propped him up so he can calm the markets down. You know, they call him Jamie, they call him Daddy. They call as far in the banking, they call him Daddy because he just comes like, it's okay, nothing to see here. And so that's why Jamie Dimon had to come out today, right? Anybody has anything to say about that?
No, he's CEO of JP Morgan. You know, they have to me, they continue to get bigger and bigger and bigger beyond what they should be allowed to, but they allow it. They bought out and saved a few, got involved in the banks collapsing this year yet again. And so they're huge. They call on him because the government allows them to buy these distressed institutions. He's there, he talks just like he wants to talk to try to save everything. And he'll come out. And I'll tell you this. This is the one piece of information I've learned over all my years of being in the industry, teaching at high school and college levels, and now doing YouTube. Look at the actions of the whales. Look at the actions of the CEOs. If you see them selling stock but saying everything's rosy, beware. All right. Same thing with the big hedge funds. Look at Warren Buffett. Is he a net buyer of stocks now, or is he a net seller? Well, based off the last report, we know he's the what? Net seller. That doesn't make me all warm and fuzzy. All right. And so I tell you, go by the actions of the whales. Do not just listen to their words. If you do that, you're going to fall for the trap. The rug gets pulled.
Can I jump in, Mo?
Holding. Yeah, absolutely. Jump in, my friend.
I want to just chime in on what you're saying here about going off of what they do, not what they say. And one of the ways that I do that, I always tell you, is I can do it for free using Moomoo. right? I can go and see what the unusual activity is, right? So when I tell you these things, I'm really trying to give you the tools that I'm using so that you can see what I see. If I see everybody is buying call options, they're spending $10 million on calls, I'm like, oh, they are willing to put so much money down to say that they don't think the market is going down. And I want to ask you, Larry, to do something for me.
Yes,
Put it
sir.
back on your screen and look up VOO on Google, right? The ticker,
Okay. Okay, I
and then
will.
show us
I
year to
will.
date. Show us year to
Year to
date. Put
date.
it up on the
Okay.
screen for me.
Okay.
So, and I'm just gonna keep
Okay.
talking.
All right.
What I want everybody to think
I'm
about.
gonna I'm gonna do that. And then I also want to
Thank you.
show you why while everybody is talking about this, that JP Morgan actually lost 75 billion in institutional deposits as customer demand higher yields. 75
Insane.
billion. This is what's going on, good
Insane.
people. Behind right in the
Right?
scene. No big news blurb about it or everything. But Kenan,
No.
when you finished VOO, you talked about a high yield savings account. I want you to come back.
Yep.
I want to help the people. Right
I
behind
got you on
seeing
that.
that, then when you finish what you're saying, I want you to touch on that for a minute, okay?
Will do.
Because
Will
that's
do.
important. I want people to leave with takeaways. A lot of takeaways,
So everybody in the
right?
chat, I really want you to pay attention to what I'm
Yep.
about to say here.
And
Throw
Josh,
some headphone emojis in the
yep,
chat, family. This is what we do in a family. So I know
yep.
that you're listening close, right? You might be
And
riding a
Josh, if
bike,
you
running on the
want to
treadmill,
chime
sitting on the
in,
couch.
I'm sorry, go ahead.
Put the headphone emojis in the chat. Check this out. You see, and Larry, could you go to year to date? Year to
Yep.
date on VOO. This is the Fortune 500 companies. This is basically the market, right? This is basically the market. It's up 18% today. Let's think back to January. Let's think back to February. Let's think back to March. How they were telling us the banking crisis. Oh man, it's a wrap. Everything is over. Don't buy anything, right? The mainstream media is telling us that. But look at what the market was doing. How does the market go up like this in that amount of time? These are the top 500 companies basically in the world, really. And look at what's going on here. They're up 18%. The market is not supposed to move like that in a single year. But what's going on? They know it was time to buy. But what were they telling you? They were telling you not to buy. They were telling you to be afraid. They were telling you to stay out of the market while they were loading up. And this is what I want you to see. And another thing too, I'm so glad Larry brought that up about the bank losing $75 billion in people's deposit. You know what's crazy about that? I bet you didn't hear about that, but you heard about aliens. Every
Yep.
time you see and every time you hear about aliens being real, not to say that they real or they're fake, you got to look at the scroll down a little bit, see what news they didn't put on the highlight. They want to make sure that you kind of distracted so you don't see that they losing all of your money. You understand what I'm saying? So make sure you're paying attention. They don't want you to know to go and buy when people are fearful, right? They want you to buy after it ran up, after they already established their position. And that's extremely important to me. If anybody else wants to chime in on something, you can. And then I'll get on to the high yield savings account.
Can I comment on
Absolutely.
So just as a commentary, on these big banks, I was reflecting back. I think it was J.P. Morgan, or it might have been Bank of America. Forgive me, but back in the 2007, 2008, 2009 recession, one of them dropped all the way down to $2.50, and I remember at the
Citibank.
time
Citibank.
was that. No, not it wasn't Citibank. There's what either Bank of America or
Oh, BAC. Citibank
BAC.
went way down. Remember in
Yeah,
2008,
dude.
I told you I was loading up on it.
So here's the thing I just want to make. I understand that people like the bank stocks. They've come up with everything else recently. They've testing the top of their range, but they're losing money. And you know who's getting it? I mean, let's be honest. I think it was Jamie Dimon lost $200 billion overall in the last quarter is what they reported. And the stock went up. And that went so much against my logic. How are your core business is to hold people's money and invest it. Last quarter, you lose $200 billion. The trend is not moving in your favor and the stock goes up. That's a shorting opportunity. And don't underestimate how low this can go just because it's dropped, what it's dropped in 2022 and this year. Just because we're down 50% does not mean this thing can't go down way, way more, another 50%. But I want to point out that Apple has been gaining deposits since they launched their Apple Pay. They've been gaining deposits, and so has SoFi. So you look at where the money's flowing to, and that's another reason why I'm more bullish on Apple going into earnings.
I am too. Absolutely. So let's, where are we on time? Oh, we're doing good. All right. So we're going to switch right here and we are going to go to crypto, and then we'll be back to stocks. For those of you that have questions, Josh, we are going to cover SoFi and Palantir, because those are some of the ones that people want to know about, right? So I want to cover Mara, Riot, and BTC. I'm going to open up with the gem that I had for you when a certain guy did that cliffhanger. Actually, he did you a favor by doing that cliffhanger. My man Kenan did it two weeks ago. All right. Now, I want you guys to look at this, okay? I want you guys to see this. For those of you that don't know about crypto, this is very important. I want everyone to look at this, right? I did it on one of my videos. I'm going to make a longer video about it. This is the past halving dates, right? For those of you that don't know what the halving is, Josh, take 30 seconds and tell them what halving is.
In a nutshell, they basically are making it more difficult to process the transaction, or the cost is increasing. So they get paid less money as a reward for processing the transactions. And the value is that because of the supply and demand constraints of Bitcoin, and that it is it basically can't go up, it can't inflate. The idea is that the value of Bitcoin will rise, but the reward for handling transactions will go down. And so this will be the fourth time that the rewards for handling transactions has been cut in half.
Right. Now, so also too, now the miners get paid in Bitcoin, right? Look to the right where it says block reward, right? So here's the block rewards, right? So the first halving was in 2012. It went from 50 Bitcoin down to 25. Follow? The second one was July 9th of 2016. It went from 25 Bitcoin down to what? Half, 12.5. The third one was May 11, 2020, from 12.5 to 6.25, and then 6.25 to you see it. I'm forgive the blob at the end. I took a picture of a picture. That's what that is. All right, so you get it now, right? So now they're getting half. So what happens to Mara and Riot? This is what I want to show you. And Josh, I want you to chime in on whoever wants to chime in. Josh, I know you have a lot to say about this.
Can I comment on this just real quickly?
Yeah, go ahead.
I covered it in detail in my video today, and I made a distinguishing remark between the altcoins and the miners, because the big question is if Bitcoin goes up, we know the miners will go up. If Bitcoin goes down, we know the miners will go down. But here's what some people aren't aware of, is that if Bitcoin goes sideways, the miners will go down, okay? And so will coin, right? And so I just want you guys, but the altcoins traditionally, after we have hit the bottom on the alts, they don't normally break to a new low. They can go up and they can come back and touch that low over the accumulation phase. But the low, what some people aren't aware of is that if Bitcoin goes sideways, will go down.
Kenan, you did it stop?
Yeah, it did.
Okay. All right. So listen. Now let's go. Thank you for that, Josh. So what's going to happen to the Bitcoin miners? That's what I want to point out. And this was the gem that I was going to leave you guys. What's going to happen to the Bitcoin mining companies, right? The miners, Mara, Riot, Hut, CleanSpark, you name it, right? So look at these dates. As you can see, the fourth halving is expected April of 2024. Some say March, some say April. So we believe it's between April and March, right? And so I just wanted to point this out, right? Here's what happens before that. There is a sell-off of the crypto mining companies before the halving. But as you can see here, I don't know if you can see that I know that's tiny, but here we have, that was the fourth one is expected. And what happens right here is when the last one was, what was that? May 11th. So let's go. So around here is where the last halving happened, right? So clearly you could see during the halving and leading up to the halving is the best time to buy the miners. You see here? So here's where it was actually the 11th. That's 5/18. It happened on the 11th. What happens after that? This is Mara that I'm using as a chart. Mara. What happens after that? As you could see, it was 70 cent, 80 cent. What happened after that? It skyrocketed, right? Look, that's 75.92. You see that number to the right? That's $75.92 from 40 cent, from 80 cent. All right? So from 80 cent all the way up to 75.92. Follow? And so here's what I like about that. And I just want to leave this gem with people because it's going to be good money made. What can a lot of you guys do that you can't do with crypto? You could set a trailing stop loss, right? So we start accumulating, right? We're accumulating. And this happens months before. There's a sell-off leading to the halving. So there's going to be a time where you need to take profits from your Mara and Riot. I went over it with my followers where I sold them all. I made enough off of Mara and Riot and a little bit of HUT to buy a full Bitcoin, right? And so there's going to be a slow sell-off. You know, even if Bitcoin trades sideways, these companies will slowly start to bleed off, okay? Now, don't be in a rush to DCA while they're bleeding off. I would tell you that I believe even if you wait until January of next year and start DCAing up until the halving or even past the halving, I believe that Mara, Riot, HUT, CleanSpark, and all of these plays will make you more money than most crypto will. Josh?
Yeah, I
Well,
agree with
sure.
that. And I'll give you guys
Yeah.
some levels. So if you got your pen and paper, go ahead and write this down. So
Yeah.
what I like to do is, like I tell you, on my Discord, I go and I trade on the live streams, right? On Tuesdays and Thursdays. And what we do is we tend to break out trade, aka we wait for the trades to come to us. And even when you do the technicals and you wait for the trades to come to you, sometimes you'll get false signals. But there's fewer false signals in breakouts than you just jump in randomly, right? So here are two breakout levels that I want you to pay attention to. So then you say, oh, the trade is coming to me, right? So here we go. The first one is Riot, ticker symbol RIOT. It's a Bitcoin miner. Here are the technicals, real quick and easy. I'm not going to give you the downside yet. I might very likely do that with the family and the Discord and everything, but for now, I'll give you the upside, right? Because remember, when you do technicals, it's like an open book. On one side of that book, it's reading you what can happen towards the downside and how to play it. On the other side of the book, it's reading you what can happen on the upside and how to play it, because there's money to be made both ways when you put the time in and learn. For now, I'm going to give you the upside. Now, on Riot, if we can hold over $22, I mean, this is when Bitcoin is likely to be pumping. But I'm talking about it's 17 right now. You wait for the trades to come to you, right? You see it go to 22. What I'm going to do, not telling you what you should do, and it holds over 22. Oh, yeah, this is looking like a technical breakout. And I could see it easily holding over 22, going to 40. Now, again, a technical breakout. That's the upside. You don't want to get caught up in only having the upside, so learn the technicals so you could do the technicals on the downside. The other one is Mara, ticker symbol MARA, another Bitcoin miner. Above, let me just move my chart real quick. Above this level of about 21, I can see it going to about 32 on the technicals. But remember, there's upside and there's downside. When we see it go above 21, I'm talking about Mara, and I see Bitcoin is pumping too, oh yeah, I'm looking to play this one to 32. You understand what I'm saying? But now you're asking yourself, why don't I just buy Mara? It's $16. If it's going to go to 22, then why don't I buy it now and then ride that to 30? Because again, when you're patient and you let the trades come to you rather than just jumping in at any time, what you do is you win more than you lose. And then that's the entire goal, to put the edge in your favor. So just go ahead and write those levels down. But remember, it's very likely that things can come down before they go up. But when they go up, those are the levels I want you to look out for.
Back it up, Josh.
Well, Crypto Fever made a comment. He said the mining stocks were 1/20th the size of the company, of what they are now, but it all depends on what Bitcoin is going to be doing. I just wanted to agree with him that all of these
Yes.
companies had hundreds of millions of dollars injected into them, way more infrastructure. And so you cannot look at the previous cycle to determine how low they will go, because they're not the same company. Last
Right.
time Mara went to $1, I don't see it.
It's
getting
not
down.
going to a right. It's not going to $1. I just wanted them to know about the sell off. I don't think now is a good time to be loading up on Mara and Riot. We ran it up, but I just want them to beware of the sell off before the ramp up.
Yeah, I completely agree with that. And, there will be, if Bitcoin is, I hope you guys can hear this, if Bitcoin even goes sideways, the miners will drop. They will not stay sideways.
Thank
They're
you. That's what I'm trying to say.
And James spent 30. This was in the notes earlier. He spent $30,000, took a position on Mara at $17.26, and he said, "What should I do?" Right? And well, I mean, 17.26 was a pretty lofty price. There was no DCAing in that price, and it doesn't sound as if there was any stop loss. And so I'm not going to tell anybody what to do. I will tell you this: if August and September turn out to be months of correction before this bull run continues, and I would say that that's a pretty possible scenario. 6 months up, 2 months correction and sideways before a continuation only makes sense. If you're in some of these risky positions and you get anxious and you get nervous, you could find yourself feeling like you need to panic sell. These can come down to $12. Mara and Riot have their best support at $12. And if Bitcoin moves sideways for the next 2 months, I would imagine that they would get there. So I'm not telling you what to do, but I want you to be aware of the risk that you're in when you don't choose to use a stop loss on a trade like that.
Absolutely. It's a must. It's a must. I actually think that Riot, not Mara, I think Riot could come as low as 10. That's just me. That's what I see. Now, will I wait for it to be 10? No. I'm going to look at the time that we are in the cycle of crypto, right? Always keep the cycle of crypto in mind, right? There's 4 major cycles in crypto. Just understand, if you're in the accumulation stage, it's simple. Just accumulate. But there's a time with these miners not to accumulate. And I would not be accumulating on the way down, right? And so just let it come down and then start. You got time. I believe you got a solid 3 months to accumulate doing the halving. Before
and I can give you
in a month doing
now
that.
You guys got me wanting to get the other side of the book. Now, see, it's all right. Look, so the other side of the book, I gave you the upside, right? You always want the trades to come to you. I'll give it to you quick. Riot towards the downside. If you see Riot, right, and we're very, very close. We are extremely close towards it breaking down. In the technical terms, breaking down, it means it's just going to drop. It's basically a falling knife. If you can see Riot hit $16, right? I'm looking at the technicals right now. It has a high probability. Nothing's guaranteed, right? High probability of coming down to 9 if Bitcoin drops or goes sideways, right? That's a huge drop. But again, there are people who are going to be crying about it, but then there are going to be people who are going to be winning about it with the put options. Now, Mara, on the other side, I already told you upside. This is the downside. It has a chance to lose basically 50% of where it is. So if it gets into the $15 range and cannot get back into the $16 range and Bitcoin is trading sideways or dropping, Mara is coming back down to $8. Again, learn how to trade the options on that. And again, make sure you do your own research. I'm not going to tell you what to do, but I can tell you what I see here nice and clear.
Yep. All right. Let's go to Mo. Mo, I want you to talk about bonds as it pertains to what's going on right now. Just whatever you have. For a few minutes.
I got you. I saw a couple questions out there dealing with this, and we've been discussing this over at the Patreon and the Discord and stuff. This is one of those buys. I'm big on TMF, of course, as people know. That is a 20-year plus. A lot of treasuries making that up, the longer dated ones. And people are wondering what happens with Fitch with the downgrade of U.S. debt. That's just like a credit score. Now, Larry, he mentioned something about credit scores at the beginning. Because it's a lower credit score for the government, that means the cost of them raising money goes a little bit higher. That's bad, which we saw in the markets, got priced in today. on the long dated treasuries, TLT for non-leveraged 20-year plus. TMF got priced in as well. That's the 3 times leverage 20-year plus. So you see that happening. I took it as an opportunity, and I'm going to take it as an opportunity to acquire more, continue to DCA. I'm going to be buying on the red days, because this is for those in treasuries, bonds, longer dated ones, keep this one thing in mind. We are going to eventually see the Fed cut. We know what happens every time they cut rates.
Yep.
The long dated treasuries start to roll up. The problem is we just don't know when it's going to be. It's going to be one of 2 things that have to happen. You got to have the economy absolutely just crash, and then they got to cut to kind of stimulate, or the economy does fine and inflation gets below 2%. That also means they can bring those rates down, and they could be aggressive. And that is the good news. So the question becomes, what's the worst situation, Mo? Well, how do we lose money continually if it stays stagnant with inflation around 3 to 4%? The rates don't come down, unemployment stays at 3%, housing keeps going higher, and the market keeps taking off. That's going to lead to the Fed having to raise rates even more, which is bad news for holders of long-dated treasuries. I don't see that happening. That's why I continue to put a lot of money into the long-dated treasuries, and I'm going to continue to do that.
All right, I'm going to make a comment here. Josh, I want you to pull up SoFi and talk about SoFi. Kenan, right behind that, I want you to talk about Palantir. Any of us could jump in. I want to just feed the people, right? So Josh, SoFi, Kenan, Palantir, and I'm going to talk about Tupperware right now. Look, so if you're part of the Stock Up fam, what did we do yesterday? Well, I ain't going to say we. What did I do yesterday? Because, you know, anything I say is not a suggestion for you to buy, hold, or sell, blah, 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 blah. All right. I did a put on Tupperware, right? TUP, right? And you guys saw me cash out 25%, like 2,700 this morning. But if you look at my video, remember, always look at my previous video. I will go back and tell you guys when I make a trade. And if we go back to, let's see here. If we go back to where I said I got back in again, right? Why did I get back in again? Because I expected it to fall. So we did a put, all right? And so let's see here. Let's go to the comments. Here we go. Right. See here? I went back. I said, though it's risky, I just re-entered with half the amount of TUP puts, okay? And where is it? This is why. This is what I expected. This is what I expected because why did I expect this? These are lessons. Because by the time a potential short squeeze hits the main media, it's time to sell. That's Larry's rule of thumb. By the time you start hearing it on the news, which it was this morning, it is time to sell. You're already late to the party. So now, it went down 31% today, as you could see, and after hours, it's down almost another 9%. So I'm looking to cash out yet again on my Tupperware puts. Josh, SoFi, let's go.
Let's get into SoFi. SoFi had some really interesting price action this last week. So what they did is they jumped into a new price range. I identified an upward channel that SoFi had been really respecting and moving within. And it broke out above that channel. And I said, now, if we stay above this channel, this is super bullish. It moves SoFi from the range of between $10.50 all the way up to $16. But I did warn. I said, now, if for any reason something goes bad, like, the AAA rating of the United States popping its head through the door, and we were to break down back beneath the channel, then we go back into that trade range. And so we're in a critical spot on SoFi. The range that we have to break above to get back into the upper trade range is $10.50. We fell beneath it. Right now, we're sitting at $10.13 after hours. So now we're in that lower trade range. Now, tomorrow could be an interesting day. We could find ourselves pop back up above, and this could be a fake out. But if we don't pop back above tomorrow, then undoubtedly, I think the support that we're going to come back to for SoFi is that $8 range. And I think we're going to then live between 8 and 10.50 until we build more momentum back up to the top or the next range above. That's what's happening with SoFi.
So give the levels one more time, just the levels.
So support, if we stay beneath 10.50, is going to be $8. The likelihood that we would come back to $8 is very, very, very high. If tomorrow we were to close back above 10.50 and this was just a fake out day, we would disregard the fact that we broke back into the channel, and we would then stay in the trade range from 10.50 upwards to $16. Right now we fell out of it. So if we don't close back above 10.50 tomorrow, then this is going to go lower back to 8 before it can find support and begin to move back up.
Kenan, right on time. What you got to say about Palantir? And Josh, feel free to jump in.
All right, so Palantir, right? It's a great trade stock, and so is SoFi. What I mean by that is they are not currently in long-term hold range. I know people don't want to hear that, but it's the truth, right? It is what it is. You got to understand this. Just because something is a good company, just because something has a lot of potential, that doesn't mean you want to overpay for it, right? Let's think about it like this. LeBron James, great basketball player. Michael Jordan, great basketball player, right? Serena Williams, great tennis player. Do you want to pay them $10 billion to do that? Probably not. Do you want to pay them $100 billion to do that? Probably not. Just because somebody has a lot of promise or somebody has done a lot of good, that doesn't mean you want to ever overpay. You either want to pay what it's worth or pay less than what it's worth, because this is business at the end of the day. I seen somebody in the comments, I want to say Russell, and he's talking about, and again, shout out to Russell again, but I always keep it real, keep it raw. They can be great long-term stocks, but again, you got to get a good price. That's super important. You can't just like a stock and then buy it at any price. So here's the deal with Palantir. It's currently range bound, meaning it's stuck between a support and a resistance, and it really...
Go, Josh.
Okay, well, on Palantir...
Right? So we want to see it break either of those so we can make money on a breakout or on down. Now, what I want you to understand is that money can be made both ways. You just got to go and learn how to go about doing that. So I say that to say this. Make sure that you are getting the best prices. And one way, I want to just give you guys a rule of thumb for analyzing if something is a good buy currently for a long term or not. And this is the rule of thumb for the stock market in general. Look at the revenue for the company. So let's say you look up Apple 2022 revenue, SoFi 2022 revenue. Google these things. Palantir 2022 revenue. You're going to get a number for the money that they made the entire year. Now, if you get a great deal on it, here's the thing that I tell myself. Revenue times 3, so yearly revenue times 3 is what the market cap should be. Yearly revenue times 3 is what the market cap should be for you to get a great deal. Sometimes you'll get a good deal, but if you want a great deal, that's where it is. So now I say this, Palantir, their current yearly revenue is about $2 billion, slightly under that at 1.98. But if they're $2 billion in revenue times 3, okay, $6 billion. That's what the market cap should be. If the market cap is not there and it's way above like it is right now at 42, that means I'm not getting the best price for this company currently, right? And this is a rule that apply to every situation, but it tells you, oh, if this company is a $42 billion company and they're only making $1.9 billion, this is a company that's going to be extremely volatile. So that means I can trade it towards the upside, towards the downside. It will not be stable. Your long-term stocks, you want them to be more stable. So again, I'll say it again. Revenue times 3 is what the market cap should be.
Larry,
for me,
I got a perfect
when I'm going long on it.
Okay, go ahead, Josh.
Sometimes you'll get it and it won't totally match up, but that's just a rule of thumb for a great price. Sometimes you won't get a great price, but that's what you got to understand. And when I see that, I say, oh, I'm trading this stock. I'm not holding it long.
Sorry about that, Kenan. I thought you were finished. Go ahead, Josh.
Yeah, I want to just add to what Kenan is saying by illustrating an interesting point from today's trading, okay, for Apple and for Palantir. So we have a pullback day, right? And so I often talk about the impact of volume and what it tells us about sentiment and momentum. So Apple actually went down. Yeah, okay. I want to just add to what Kenan is saying by
just wait a minute.
an interesting point from today's trading.
Kenan, Yeah, go ahead, Josh.
Okay, so basically, Apple fell today, but the volume went down. And so Apple, that's extremely bullish for
Cool.
Apple, right? Now, Palantir fell today, right? So Apple's volume went down briefly. It went down, and Palantir's volume went up 76.4%. So let's process that.
Hmm.
So when the selling began, and Palantir's come up and hit a strong wall at $20. And when the selling for Palantir began, it began with conviction and volume went up significantly. But when the selling began for Apple, volume went down. So those were the panic sellers. Those were the fearful sellers. It really had less volume today on a down day, and it's been showing increasing volume on up days. And so just as a reminder of how bullish I am going into Apple's earnings tomorrow and
Hey,
what
hey,
Palantir's volume is
hey,
telling us.
hey, Josh. Explain the correlation between volume, the volume and price one more time, like you just did.
No problem. So basically, the volume, so you've got the two biggest indicators that are often overlooked. Obviously, price action. So if the stock's going up, we know that's good. It's green. It gives us beautiful little green candles and we're making money, right? That's the number one indicator. You want to buy low, sell high. But the second biggest indicator that sometimes people overlook is what is the volume bars below saying. So if the trend, okay, is going up at the stock price trend, you want to see the volume increase as well. Okay. That means more interest, more buyers, more momentum. But if the trend is going up and it had originally had some increasing volume, but eventually you see the volume switch and the price keeps going up, but it starts going up on decreasing volume, that's signaling that the upward move is coming to an end.
Everybody, write that down. These are
Hey, I got an
absolute
easy way to say it.
gems. Hold on.
I got an
These are
easy way to say it.
absolute gems. You go ahead. We got 4 minutes. I want to end this, but I want Mo to come in and talk about Mo. I heard something that you got going on. Go ahead, Kenan.
Can I summarize that really quick? 30
Yes.
seconds. So what Josh is saying, just so you can write it down quickly, is that volume confirms the direction. Volume confirms the direction. That's it. So if you see a stock going up and the volume is going up, that confirms the
That's
direction.
right.
That means it's going to keep going up very likely. If you see the stock going down and then the sell volume is also going up, it confirms the direction. So
Yep.
if you're going for a trade, just make sure, hey, is the volume confirming this? If we see a sell-off and we see more sells and more sells and more sells, it's confirming it. If we see it pumping up and we see more buyers rolling in, it's confirming it. So the volume confirms the direction.
I dare y'all to watch it live and get as many gems as y'all getting tonight. I want to come we coming like
Seriously.
machine guns, okay? Mo, let's say
Yes.
that this downgrade from Finch goes all week. Forbid, right? I'm not even
Yeah.
Catholic, but you guys
No,
know
we don't
I'm
want
praying.
that.
But listen, but I'm a believer, unapologetically. Deal with it. So what I'm saying is, if this continues this whole week and it spooks the market, which I don't think, what will you be looking to buy long term if the prices of these stocks come down? What are you looking at?
Gotcha. Two things. One, you mentioned the big event, of course. For those who know, you've been following my channel, StockMo, over there. Google it if you haven't been over there. Like, subscribe, all that. But I have an opportunity, I should say, for the long-term treasuries and stuff. But for me personally, if you ever wanted to invest into the channel, you can now invest into the StockMo channel over at gigastar.io. If you don't know where that is, just click on any of my videos, my recent videos, click the top link. You will be able to get over there and see all the details. Now, as for all of the, where are we going with the Fitch downgrades? This is the big thing. If the market kind of just starts to fall apart, we had, 6, 7 great months in this market. What happens if we are at the end? What happens if all of a sudden it starts to collapse back down? And we know the Buffett indicator says it needs to fall almost 50% to get back down to where it needs to be. Everything is kind of setting up for we're going to pay the piper kind of moment. Is it here yet? Honestly, I don't think so yet. I think it'll be here October plus or minus a month, but just say it is here. Say this is the beginning of pain train. It's coming. It's going to hit us. It's going to be nasty. I like something T-bill, TBIL, over 5% interest, risk-free. Folks, that is an ETF that matches up. I think it's the 3-month. It's a beautiful one. All right. And that's one that people can look at. There's other ones out there, other bonds, other treasuries you can get into, TLT for the long term. So maybe pile into some short term, TBIL, pile into some 20-year plus, TLT. It's a nice dumbbell approach. You got short term, long term, should do well if we go into pain also. So that's what the market crash in 10, 20, 30, 40%. These I would expect to go higher. They would crush equities. Now, that's if the market collapses. All right. So that's the bond kind of look. Hey, Mo, I don't like stocks anymore. I don't want to leave it in a bank. How can I still make more money in appreciation of the price plus the interest? That's what you're looking at. For those that want risk, TMF. That's a 20-year plus triple leverage. That's if the Fed has to do a surprise cut, which I think they will before March. And I think it's going to be more than 25 basis points. That would start to take off as well. Now, it's been getting hit pretty hard here lately. Fitch downgrade, unexpected. We're seeing Japan selling U.S. treasuries because now they're changing their rates. So it's slow. Everything's kind of a bad avalanche of negative news for the long dated treasuries, but it's kind of all priced in now. And so is this the time to buy? That's up to each and every one. But that's my take, Larry. And
Yes,
we'll
sir.
see where it goes. I think we have a little bit of positive time left, though.
Yes, sir. Yes, sir. Josh, hey, 1 minute. You see that? Ray. They always say, who did that? Pookie them, Ray them. Go ahead, Josh.
Well, right
Because of
now,
cornbread.
Right.
an option for everybody right now is to play volatility. You can play volatility by buying a call option on the VIX. You can also play volatility for certain stocks by buying a call and put for the same strike price and the same expiration date, because what you're getting is an increase in implied volatility on both of them. So it doesn't matter which direction it goes, you're going to cash them out after big moves. And so that's called a straddle. But yeah, the markets, I think we have to see what the markets do tomorrow, Larry, because today we had a reaction to a big news event. It almost means nothing on a technical level. You almost have to scratch the day. You got to give Wall Street 24 hours to digest this information. Tomorrow is going to be the day that matters to me. And if we see some life come back into these stocks and we see Apple and Amazon deliver and the AI narrative continues, then we're off to the races. However,
hey, let me ask you this though, Josh.
Yeah.
If this is a sell-off, let's go back to 2008 when we got downgraded by Standard & Poor's, and remember how long that sell-off was. And all of these high-tech companies start to come down and the valuations start to come down. Yeah. What would you be looking to load up on?
That's a good question. I would say that I'm going to play volatility. That's the best way I would put it. Gotcha. I would be buying some puts, but I will tell you guys that I looked at the charts. I looked at the SPY and the SPX today, and I see an ascending wedge. Okay. And I think that we are still going to remain within it. I see us coming back to, I think it was 4,200. And, if you're bearish, you're going to hate what I'm saying. Okay. The worst that I see happening right now from a bullish perspective would be an 8 to 9% pullback, which would not even constitute, it would be barely a correction on a market that's been going up for 6 months. And then I would think that we could continue up in the channel that I drew today. It would only be if that channel broke, which would be a break beneath 4,200 or 420 on the SPY, that I would begin to say, okay, now we're at a point of failure. The market's turning. We're possibly going to go down 20%. Right now, I don't have that view. I'm going to give the market the benefit of the doubt. I'm going to see how it processes this bad news day.
That's great. That's great. Hey, we're going to end it right here. Listen, man, this hour, we 3 minutes over. I tried to be right on time today. But listen, you guys must admit, we just been coming with straight lightning. Like this has been extremely informative. And I appreciate each and every one of these gentlemen for what they do. Listen, I'm going to end by saying this. Well, first of all, I want you guys to know that if you really want to learn the market and if you just got in and you know nothing about the stock market, this is what you need. You need to download the top link, Stock Up You, and get taught by some of the best in the business. That's what you need to do first. And stop trading if you're constantly losing money, losing money. Josh, I want you to talk about Mumu right quick, and then now that Mumu has opened up to another country, talk about Mumu and what they have to offer, and then we'll end it. Go ahead, Josh.
Yeah, I'm going to give you guys just a micro overview. Mumu is available in Australia, Canada, and the US. It just opened up to Canada, but only for registration. You cannot deposit funds and you cannot trade on it yet. They're just allowing you to register on the app. So if you click on Larry's link and you're not using a VPN and you're from Canada, it should direct you to the opportunity to register. I do think they've got a free gift for those who are registering. Down the road, when you're allowed to deposit money and to begin to trade, when you put money in, then they're going to open it up to the big stock giveaways that they're known for. Right now, if you're from the US, you can get up to 16 stock and I think a $50 cash bonus. So yeah, that's basically what's going on. It's good news for those in Canada. They can finally join in on the conversations that are had over on the Mumu app.
Hey,
So I got
that's
some
it.
closing remarks.
Go ahead.
I'll keep it short.
Yes,
so,
sir.
all right. One of my guys just said, Kenan, he said, go hit up the watch list. So I got the watch list in the Discord. I'm about to go do that in a few when I get off of this live, everybody. So I got you on that. Another thing is, now, if you think this Fitch downgrade is a big catalyst for the market, whoa. Wait until August 10th. This is the real catalyst. This is the CPI inflation data. We had 12 straight months of the inflation on the books, right? You might not feel it, but on the books, decreasing, right? It's been decreasing on the books. And this is why the market has been pumping up all 2023. Now, on August 10th at 8:30 Eastern time, if we finally get inflation going back a little bit in the other direction, so we got a 3.0 on inflation year over year. If we get a 3.3, 3.2, 3.1, the market is not going to like that at all because the Fed is going to have to stay aggressive for longer, and they're not going to like that. What you would love to see is us to get into the 2.9 or even lower, and then that any bear that day, if we get into the twos, they're getting smoked. So it is what it is.
So
I
a lot
love
of
y'all.
people,
Larry, thanks for having me on, and I appreciate it.
Hey, I appreciate you too, brother. A lot of people asking about the Qs. I'm going to take this because I'm going to tell you that you could get absolutely smashed playing the Qs if you don't know what you're doing, right? If you're just guessing just because the market is down today, you think it's going to continue tanking tomorrow, then, Josh, do you know if the market going to be red or green tomorrow?
I do not know, sir.
Right, and you're trained, you're skilled at what you do, right?
I lean towards believing a little pop, actually.
Exactly, and so somebody was saying, should I play the SQQ? Right, you would have got smashed if it pops. I'm a trained investor. As a matter of fact, me and Josh got started. I actually invested before Josh did in the 90s, but then in the 80s, and I didn't know what I was doing. And then the 80s. Actually, I started not in the 80s. I'm sorry, man. Boy, what was it? 2008.
I was running around the streets in the 80s, man, in the neighborhood.
Exactly, 2008. Yes, I've known Josh this long. As a matter of fact, I'm going to end by saying this. If you guys appreciate this, then I want you to go to every one of their pages and subscribe. Every one. I'm also going to say this. If you want to get blocked, say something about Josh, say something about Kenan, say something about Mo that's negative, you're just going to get blocked. That's all. I don't want you. Listen, collectively, we bring too much information as a package, okay?
Right.
And that's all I'm going to say. I'm only speaking for my page. We're about all of us. This family, there's probably over 2 million subscribers amongst all of us. We are here so you can make money. Anybody want to say anything in partner on that?
I agree 100%, Larry. I'll be banning anybody who says anything negative about any of the Stock Squad. We will take care of that. We are a community, a family, and we're here to build each other up, not rip each other down.
That's it. That's what we are. We're here about, okay? And I want to employ you, the family, to help to keep the pages clean. If you see anything negative going on, just shut it down because it's only a distraction, right? So what we want to do is concentrate, keep our hands to the grindstone, so we can continue to bring you information that does what? Make you money. hey, that's it. We're going to leave it right there. Hey, I'm just going to end it right here. I'm not going to do only Kenan can do the cliffhangers, man. Can't nobody do it like he's like the James Brown of that. He's the hardest working man on cliffhangers, man. Can't nobody do it like him. Hey, again, make sure you check out all the links below. Congratulations, Mo. Say that again. That's Gigastar what?
.io. If you guys want to invest in the channel, come on over, gigastar.io, or a link at the top of any of my videos. I appreciate that, Larry. Thank you.
All right. Hey, we're going to leave it right there, good people. Make sure you rewind this if you're just in, and make sure to share it with all your families. Let's get me and Mo to 1 million. Let's get to 1 million. I had to go to 1 million.
2 million.
2 million. Right? Let's get, as a matter of fact, we have enough people here to get Stocks with Josh to $100,000. $100,000. 100,000 subscribers.
He's way over that. He needs to be up to,
I'm talking about in the next 30 days. I'm talking about in the next 30 days. That's where my faith is. My faith is right here. So there is no reason, you guys know, there is no reason he shouldn't be over 100,000. I don't care how new he is to this game. With the knowledge and the information that he's dropping, there's no way. Let's get Kenan Grace to 500,000. It's enough of us here to do that in the next 30 days. Yep, I got big faith. All right. Hey, I'm going to leave it right there. Live, love, laugh, learn, and earn.